But Cairn India refuses to go down without a fight. Cairn's troubles include a crash in crude prices, a 20,495 crore rupee tax demand, a 3-year-long wait for the government to take a decision to extend its production sharing contract for the prolific Rajasthan oil field, as Ashmit was pointing out, and a pending controversial merger with Vedanta. Nayantara travelled to Cairn India's Rajasthan oil fields to check if Cairn India has the appetite to invest more in the current scenario.
We're coming to you from the prolific Barmer oil fields of Cairn India's and ONGC's in Rajasthan. Currently, the joint venture is producing 176,000 barrels a day, and it's got plans to enhance that a lot more. It's launched the Enhanced Oil Recovery Program, or EOR. Already, it's led to an incremental production of about 11%. Cairn India has already invested $6 billion at Barmer to develop the country's largest oil-producing field. In the last 5 years, the company's paid $11 billion to the central exchequer and the Rajasthan state government in the form of royalties, duties and cess. And after 3 years of back and forth with the centre, Cairn India has now moved the Delhi High Court to get clarity from the government on extending its production sharing contract for the Barmer fields. While you ask for timely extension, the government, and it's got the opinion of the Solicitor General as well, that it can revise the financial terms of this contract. We understand the Rajasthan government, and they're on record with us, that they want to increase the royalty that Cairn India pays. How do you react to all of that? Are you interested in extension if the financial aspect of the contract will be rewritten?
The extension, it's not what I think, it's what the contract says. So this contract is very specific and unique, and it's very properly prescribed, and ONGC board has also been on the record that it should be extended for 10 years without change in terms and conditions.
After buying out Cairn India from its former promoter Cairn Energy, the Anil Agarwal-led Vedanta had promised former Prime Minister Manmohan Singh a daily production of 500 barrels. If Cairn is to come even close to achieving that, it will have to rely on its recently launched Enhanced Oil Recovery, or the EOR program, on which it's already spent $500 million. In layman terms, EOR basically means getting every bit of oil out of a well. Imagine if your hands are dirty and you wash it with water, all of the dirt is not going to come out. But if you wash it with soap, all of the dirt should come out. And that's exactly what Cairn India is doing with its EOR. I've got Divya here with me. So what Cairn India is doing, and what I understand, is it's injecting 400,000 barrels of polymers every day in 141 wells. These, in fact, are the polymers. And if you look at the polymers that Divya showed me, very sticky, very much like soap, being used to get every bit of oil out of a well. While the recent crash in crude prices is weighing in on companies like Cairn, the company says it's not perturbed and will continue to invest approximately $350 million annually till prices start to recover. In Barmer, Rajasthan, Nayantara Rai.